Hi, good evening friends. In today's video we will be discussing about how individuals can save tax. So these are basically for salaried employees who would be interested to find out what all sections under the Income Tax Act are available to save taxes. Okay, so before that I will run you through quickly about how and what all you should be aware. So when you receive your salary slip, firstly you find something called as basic salary. Now basic salary is one important head on which various other calculations are made. So basic salary covers the first aspect, and your provident fund, which is about 12% of your basic salary, is calculated on basis of this figure. Number two is the house rent allowance, HRA as it's called. So you can claim deduction or exemption for HRA from under section 80 GG of the Income Tax Act. Now, how does this work? For example, if you're staying on rent, or let's say even if you're staying with your parents, you can still claim HRA by signing a proper lease agreement with them, or doing a lease deed. Now, HRA is calculated simply by taking the actual HRA figure or the 50% of basic plus DA figure, and number three, actual rent minus 10% of basic plus DA. So the least of the three is considered while calculating the exemption or figure which is taken for house rent allowance HRA. Okay, now you can also be having a home loan interest which you are paying and also be claiming HRA. So both can be done. Okay, now coming to the third important thing is which we call as leave travel allowance, LTA, which a lot of people claim. So people keep traveling to different parts depending upon the place where they stay. So the rule is to claim LTA, you can travel by the shortest distance available to your place using any mode of transport which is available and permissible by the employer. So this could be by air, by bus, by sea, depending upon the modes available. And whom do you consider family when you travel? Your immediate parents, that means spouse, blood relations, children, and no relatives are included in this definition. Now, this LTA can be claimed in a block of 4 years. So current block is 2018 to 2021. So it's a 4-year block. Now in this block you can claim twice for LTA. And suppose if you have not claimed for LTA in this period, then you can postpone the LTA to the next year or the next block. Okay, I have written a lot of small notes. So coming to the third thing, now we would be moving to LTA, as I said, can be carried forward. Now we'll move to bonus. So if you receive doing well in a year, so I don't know how last year went for all of us, but if you've received bonus, that's 100% taxable. So you need to be aware of that. So in your salary, you can restructure with your employer how the bonus needs to be shown in the salary slip. Number 5 is Employee Provident Fund, which we all receive, PF as it's called, EPF. 12% of basic salary, which is completely tax-free in the hands of the individual. So you can also top it up by doing a voluntary provident fund, which can be 100% of your basic salary, again which is tax-free when the proceeds are there. So this will be only if you are working in an organization for 5 years or more, then the withdrawals are tax-free, else it is taxable. Currently it's 8.5% in the financial year 2019-20. It's a good tax-free rate. Next, coming to standard deduction, which you get 50,000 rupees, a month, per annum, which you can claim for deductions against the overall salary which you are showing. Okay, now coming to next thing, which is called professional tax. So like company is registered in Mumbai, they usually charge a professional tax fee, which is usually 2,500 rupees per annum, which is available. Okay, now coming to the next important part. Now, when you consider salary which you receive, you must also understand what is CTC, which is called cost to company. So there are two different things. Let's say my salary is 1 lakh, but my cost to company may be, I'm talking about per month, maybe it will be 2 lakhs. So a CTC would include things like basic plus your dearness allowance plus your allowances like HRA, your medical insurance, your PF, your bonuses. So that in total is called your CTC. But while calculating tax, your salary would mean only your basic plus your allowances minus your medical insurance minus your PF exemption limit minus other exemptions which are available as per the tax laws. So keep that in mind. Next, we come to retirement benefits. So important to understand leave encashment. So a lot of people have leaves when they retire from their jobs. So leave is completely tax-free for government employees, whatever leave encashment. But for non-government employees, it is taxable. Now, how do they calculate? So for example, if you're a non-government employee or working in a corporate, so 10 months salary preceding will be taken, and I'm giving you how it's calculated. It's the least of the three. So 10 months salary or 3 lakh rupees exemption limit or the amount of salary for leave for 1 month for every full year of service. So least of the three is taken while calculating your overall exemption for leaves. So least would be exempted. Then there is some relief which is available under section 89(1) of the Income Tax Act. Say you're getting areas of pension or salary one particular year, you suddenly get a lot of money. So rather than that entirely being taxed, you can claim relief under section 89(1), telling the income tax authorities that, hey, look, had this been given to me at the time when it was declared, for example, the areas were of a period 2010 and you're getting in 2020. So obviously your tax incidence will go up in 2020. So you can claim relief and get exemption according to the act and rules. Next, we come to exemption of receipts at the time when you voluntarily retire. For example, somebody is retiring, premature retirement. So entire proceeds, in case you are a central government employee, under section 1010C is exempt. But if you are not having such certain policies in place, then it might be taxable. But if certain conditions are met, for example, proper system is there, like you are an employee and registered in a company as a regular employee, then the compensation can be completely exempt under 1010C. Again, you have to follow the fact that total compensation is less than 5 lakhs and you are working in a proper company, which is a limited company or a registered company or a cooperative society for that matter. So certain basic procedures are there and checks and balances are there, so usually exempt. Okay, now coming to topic on pension, which is a complicated thing. So I've just made a small note, though you can refer to your own chartered accountants and all. So money is basically either received in pension in lump sum or is taxable, because money, even if it's received as lump sum in pension, you can claim 1/3 of that pension money as tax free, the best of my knowledge, which I know. And if you're a central government employee and you have commuted your pension, then the entire thing is tax free. But if you're a non-government employee, then rules will differ. So that you have to plan how the pension will work for you. Next, coming to gratuity. So it's basically for people who have completed more than 5 years of service and the company is registered under the Gratuity Act. So if it's registered under the Gratuity Act, then for every 15 days of completed year, that will be taken as one block for calculating your gratuity. So let's say you've completed 10 years. So 15 days salary for each year would be considered for calculating your gratuity. And the rule is this is one, number two, 20 lakh rupees, and number three, the actual gratuity, whichever is the least of the three, is exempt from tax. Okay, now there will be certain more modification if your company is not registered in the Gratuity Act, then slightly some modifications in the IT Act are there, not much changes there. Now, in the next video, I will be also talking about for individuals like who are only not receiving income from salaries. Let's say if their income is from house property, income from other sources, income from capital gains, they have some business income, then that also will be added to your total income depending upon the exemptions and the things mentioned out in the Income Tax Act. So you have to be careful while calculating your total tax liability. And last but not the least, we will be also discussing in subsequent videos about various deductions in detail under section 80 of the Income Tax Act. So it will cover section 80C, 80CCB, 80D and various other things, deductions which are available over and above 1,50,000 also. Finally, Form 16 is very important. So that is a summary of whatever the employee and the employer have done. So basically in terms of the tax paid by the employer on behalf of the employee, the TDS is mentioned there, what all are the deductions, what all have been paid to these employees mentioned in this formally. And also you have a form called 26AS which can be used as a tally or reference by the employees, which can be given to their chartered accountants also. Thank you very much for watching this video, and I hope it was useful. But this is only for education purpose. This is not as any advice which I'm giving you or any offer. You need to consult your tax experts and your chartered accountant before taking any calculated decision. Thank you very much for watching this video and stay safe.